Welcome to another edition of Focus on Alternatives, brought to you by ADISA, the Alternative and Direct Investment Securities Association. For more content like this, please check out the resource library at adisa.org. My name is Greg Moz, and I'm joined today by Anastasia Amoroso, the Chief Investment Strategist at iCapital Network. Good afternoon.
Good to see you, Greg.
Welcome to the show here. So we're talking cryptocurrency, crypto assets. They seem like they've officially gone mainstream. Is that true, or is this still a bunch of hype?
I think they have gone mainstream, and I do think that this has been a breakout year for cryptocurrencies and the whole ecosystem. And I say this not only in terms of performance, but also in terms of institutional adoption. First of all, if you look at the performance of Bitcoin or Ethereum, it really is done stunningly well in 2021. But what really gets me encouraged that this is not just a fad and this is here to stay is that so many businesses, so many financial institutions, so many more consumers decided to add to their Bitcoin holdings. So I want to give you a couple of examples of how we measure this institutional adoption. First of all, we'll look at the companies out there who say they accept Bitcoin, and you'll be amazed, but something close to 30% of small businesses that were surveyed say they are willing or do accept Bitcoin.
Really? That's higher than I would have thought.
Yeah, and by the way, saying they accept it doesn't mean the consumers are actually dealing in Bitcoin, but at least, there's this understanding that we want to make this available. Then you've got some of the banks that historically maybe shied away from blockchain and blockchain payments and Bitcoin. They're increasingly making Bitcoin investing available to their customers. And by the way, they're also working on designing their own payment system that operate on blockchain. So there's just a lot of institutional adoption that's building. And then we look a lot to the private markets, and what I see playing out in the private markets is just stunning amount of private capital that is flowing to the blockchain and crypto ecosystem. And in the last year, I think we've funded the ecosystem 3 times as much as we have in the last 3 years.
That sounds a lot of positive momentum there, but there's also a lot of skeptics. I mean, is there real value in cryptocurrency?
Well, there are definitely a lot of skeptics, and there's many people who said that this has no intrinsic value and that it's going to zero. And, look, if there's not a consumer, if there's not an end user demand for crypto, of course, it's really, you can make that case. But if the fact that you have over 100 million wallets between Bitcoin and Ethereum suggests to us that this is not about to go away, and I think that 100 million wallets is going to continue to grow. Now, I think the question, Greg, you're really asking is how in the world do we value crypto? Where does the intrinsic value come from? There's a number of models out there, but there's 3 that I find particularly compelling. The first one is this scarcity element and this stock to flow model that calculates how long would it take to replace the current stock of something like Bitcoin given the annual production. And so that's one way to gauge the value of Bitcoin. And according to those stock to flow models, that value is higher than what it is today. The other way to think about it is the network effect. How many more users, how many more wallets are going to be opened up, whether it's Bitcoin or Ethereum or something else? And the evidence that institutional adoption and consumer adoption that we were talking about suggests it's likely to be more of those than less. By the way, if you think about Facebook or Google and Netflix, all of them started with a network of users. All of them built and scaled this network effect, and that's how they were initially valued. So again, looking at this Metcalfe's law, which is one of the valuation models, again, that suggests the price of Bitcoin should be higher than what it is today. Now, that's kind of the upside case and maybe a little bit of the ceiling, but what's propping up and what's supporting, what's putting the floor under cryptocurrency, and it's really the cost of production. It takes equipment, it takes powerful semiconductor, it takes a whole lot of electricity to mine Bitcoin. And today, the cost of that is somewhere around $11,000. It's likely going to continue to go up, but if you're wondering where that fundamental level of support may be, I think a cost of production is a good way to look at it.
That makes a lot of sense. I'm also seeing people viewing Bitcoin as an inflation hedge, but I'm also seeing people view it as a growth stock and investing in pure speculation. Where do you come out on that argument?
It's interesting because all of those attributes are really true, and rarely do you come across an investment that gives you, 2 or 3 different investable angles. But I do think that's what we have with Bitcoin today. So yes, some have said that this is a form of digital gold because there's a scarcity element to it. There's only 21 million units of Bitcoin that could ever be produced. And as long as the usage is there, the scarcity should support the price of it. So because of that, Bitcoin tends to be correlated with gold. That's not always the case, but if you think back to when the Federal Reserve was on the cusp of cutting interest rates and the economic activity was slowing down, Bitcoin was definitely highly correlated with gold. Now, then that flipped, where gold didn't really move higher, and yet Bitcoin continued to move higher because now Bitcoin was negatively correlated to the US dollar. The fiat currency was being debased by central banks around the world, printing money and engaging in quantitative easing. And so now Bitcoin really kind of acted as a store of value, as a hedge against fiat currencies. But then another shift happened, and now for the last year or so, Bitcoin has traded more in line with the risk assets, with the stock market. And that's because at the heart of it, this is technology. This is a technological innovation, and there's currencies and assets that are tied to it. So it doesn't surprise me that it kind of trades in line with the risk on assets as well. So going forward, what I think we can say is that this is an asset that offers very different correlation dynamics versus anything else in your portfolio. Those correlation dynamics are not always going to be static, so you have to understand which of these drivers is going to be dominant at what period of time. But bottom line is it has low correlation to the rest of the assets in your portfolio, and the risk-adjusted returns, even despite the volatility, have been quite amazing.
I agree with you, and that's really building the momentum that we're seeing here. So investors are beginning to allocate into Bitcoin. Where do you see cryptocurrency as a portfolio allocation for an investor?
Yeah, I think it's an important conversation to have right now. The reason I think it's so topical is because now we're looking at market cap of cryptosphere of over $2 trillion. And it's not catching up to the market cap of the stock market, certainly not, but it's starting to catch up to the market cap of, let's say, the money markets, and pretty soon the muni bond market. So it is a viable asset class. And there's 2 reasons why someone should add a new asset class to the portfolio. One, as we discussed, it has a low correlation to the rest of the portfolio, which is a check for a lot of the crypto assets. The second one is the risk-adjusted returns, or more technically speaking, the Sharpe ratio. If the asset class offers a higher Sharpe ratio than the rest of the assets in the portfolio, that would be another case for an allocation. So in the case for crypto, that checks both of those boxes. So to me, it deserves an allocation. The question is, where from and how much? Well, if you look at the volatility of Bitcoin or Ethereum, you're talking 70, 80, 120% volatility for some of these currencies. So I would very much size it according to this high volatility, and I would think of it as a tech investment that offers potentially great return, but also a lot of the volatility. So let's talk about numbers. How much should that be in your portfolio? I think 1 to 3% allocation is what you might normally start with if you were allocating to a high-tech, highly volatile stock. So I think that's a good conservative place to start with crypto.
And I couldn't agree with you more. You start small, get the experience. That seems to be about the right percentage. There are 6,000 or so different cryptocurrencies out there. How do investors pick which ones to go into?
So that's the exciting development about the crypto ecosystem, is there's so much innovation. There's 6,000 of them, but you're absolutely right. From the investor perspective, it is very important to do the due diligence around the protocol and know which ones are the right ones to be investing in. So I will say at this juncture, having the longest history of blockchain, having the longest tenure of the technology is a big deal. So I would initially stick with some of the more established cryptocurrencies. Doesn't mean you could only do Bitcoin. I think there's other currencies to look at, but I would think about how established is the protocol, how proven is it, what are the applications, can we quantify some of this network value that we talked about? And so it requires a little bit of work to select the right basket of currencies, but I think deciding deciding that you will have an allocation to the space and doing that in a diversified fashion, just like you would with any other investment, makes the most sense to us.
Anastasia, thank you for walking us through that. And for more information about cryptocurrencies and other educational videos, please visit adisa.org. Thank you.